Well, it's time now for business, and let's cross straight to Hanoi to speak to Jameel Ahmad, Chief Analyst at GTC Group. Jameel, what's happening on the global markets this Thursday?
Karis, thank you so much. Actually, the global markets are a little bit more calm compared to the early part of the week where we had a lot of profit taken. Again, as we said in our previous interviews, we're not surprised by the recent pickup in volatility this week because we were expecting, now that we're headed into the second half of 2024, starting from Monday, that this week could be a mixture of rebalancing portfolios, profit taking, or simply just making expectations for what the later half of 2024 might bring. But I do think that volatility will continue to pick up because we're looking ahead to the French elections and the UK elections over the next week or so, which means that we do have some political risk drivers in global markets. With that in mind, we're also going to be watching some key economic data releases, such as the final GDP readings from the UK and the US over the next couple of hours. And I do think that we can expect to see more drivers and price sentiment movers over the coming sessions.
And we're also seeing the Japanese yen weakening to its lowest level in nearly 40 years. Tell us more about that.
Yes, I think that hearts are racing right now within Tokyo, whether that's the Bank of Japan or Japanese officials, because we're now returning to where we were 2 months ago, which is when the Japanese yen was weakening to its lowest levels since the early 1990s, late 1980s. Since then, the Bank of Japan did quite famously intervene in foreign exchange markets, and they sent the Japanese yen, which was valued right then about 160 against the US dollar, suddenly down towards the lower 150s. 2 months later, recent history is repeating itself. So I think all traders now are alert to the fact that the Bank of Japan or Japanese authorities are going to talk up and speak against currency weakness because it's an issue they've been very sensitive about now since late 2023. And it wouldn't surprise me if they push the button and pull the trigger any moment now towards intervening in markets, because that's what they just did 2 months before.
Right, Jameel, and tell us about the key economic data to watch out for the rest of the week.
We're going to be keeping a very close eye indeed on the US inflation figures that come out late on Friday trade. That's specifically the PCE. Now, the PCE is actually the Federal Reserve, which is the US central bank's preferred gauge of inflation, and the biggest shadow looming over all global investors heading into later 2024. It's actually the uncertainty as to when the Federal Reserve, again, the US central bank, will start cutting US interest rates. Now, the PCE is so key to the Fed, the US central bank, that should we get a figure that's pointing in line towards inflation being nearish to the central bank target, or at least coming down towards it, it should reignite hopes that the Federal Reserve will finally start cutting US interest rates. The biggest question is whether they will do it late in 2024 or hold off a bit longer.
All right, well, we'll have to wait and see.